Hi there! With October behind us, I bought a new stock to add to my daughter's dividend portfolio. Watch the whole video to find out which stock I bought and why. Welcome to my channel where you can follow my journey to set up and maintain a dividend portfolio for my 5-year-old daughter. Yes, you heard it correctly, she just turned 5. Although we are still in a semi-lockdown, we were able to give her a nice birthday. It's November 2020. I bought the 11th dividend paying stock and will give an overview of the portfolio and the market in October. I'll take some time to analyze a couple of stocks. If you are new and like to follow my journey and see the dividend portfolio of my daughter grow, then please consider subscribing. I upload a new video each month at least. Let's do a small recap from my previous videos and discuss the market and portfolio in October briefly. I've bought 10 dividend paying stocks already. My first goal was to get one stock in each sector as defined by eToro, the broker where I hold my daughter's dividend portfolio. I have AbbVie, Disney, 3M, Waste Management, AT&T, Pepsi, Atmos Energy, PPG and T. Rowe Price, and bought them because they are all in a different sector. My next goal is to get a dividend payout each month. Most of the time a dividend is paid quarterly, and with 9 stocks I was expecting a dividend payout each month. But I was wrong. The portfolio is very unbalanced in that way. I got 6 dividend payouts in September, but last month, October, I got none. So I started to balance this with McCormick & Company, which pays out in the months I do not have a payout in yet. Well, what happened in the market in October? September, as you may recall, was a red month, but October was no different. The S&P 500 went down from 3380 to 3280. However, the month was not quite so bad at first. It even went up to over 3500. However, the last couple of days the market dropped quite a bit. My portfolio was no different. 3M did not move that much and only PPG went up from 13 to 19%. All the other stocks went down. AT&T, McCormick and Waste Management all dropped 5% or more. And I have to say that PPG also was the only stock that went up in September. Great to see that not all stocks were hit. Now 6 stocks are red overall, with Waste Management and PPG still are at the top with around 20% in the green. However, the total portfolio went down from 2.9% in the plus to 0.5% in the minus on the 1st of November. Not so nice, but this gives an opportunity to buy a new stock at a lower price. I do have something new. I added a few affiliate links underneath the video. One to eToro, the broker I use, and to Doodly, the software I use to make these videos. When people use these links and join and use eToro or buy Doodly, I will get some money from these companies at no cost to the people who use the links. If this happens, I will add this to my daughter's dividend portfolio. So, no dividends this month, even though I bought McCormick & Company, which has a dividend payout in previous month. However, you need to have the stock on the so-called record date, and in this case, this was before I bought McCormick & Company. So I invested just $50. And good news, with no future dividend cuts, this was the last month with no dividend payouts. The idea behind this diversification over the sectors at first is to reduce the risk of the entire portfolio, even in the situation or crisis where we are in now. Next to reducing risk, an important concept in building up a dividend portfolio is a steady growth, which I started last month with searching for a stock which pays out in the months where I do not have a payout in yet. And with steady growth, I think that receiving some dividends each month, similar to investing each month, is a good idea and worth chasing to keep the snowball rolling as efficiently as possible. So now I have dividend payouts each month, but still with only one payout in the months October, April and July. It's still a bit out of balance in my eyes. So for the November pick, I decided to buy another stock which has a payout in these months. So similar to last month, I looked for a stock that meets the following criteria. They have to pay their dividends in January, April, July and October and be a dividend aristocrat, companies that are part of the S&P 500 index that have increased their dividend payouts for 25 consecutive years or more. This left me with about 17 options, minus the 3 I selected last month. Again, to compare a couple of stocks, I want to choose from stocks that are also in the same sector. From the 14 left, I found Walmart, ticker symbol WMT, Sysco Corp, ticker symbol SYY, and Genuine Parts, ticker symbol GPC. They are all in the sector services according to eToro, my broker. I will analyze and discuss these 3 stocks using 7 steps and buy the best option, in my opinion, at this moment. Do you like how I work and want to buy the same stocks now and in the future as part of your portfolio with no effort? You can make an account at eToro and copy my trades automatically by using the copy trader feature. Of course, at your own risk. I'm not a financial advisor. Okay, so let's start with analyzing these companies. First, we take a look at what these companies do in short. Walmart is an American multinational retail corporation that operates a chain of so-called hypermarkets. In the previous video, the June 2020 update, where I finally bought the Pepsi stock, I mentioned my fascination with the national parks in the southwest of the United States. Going to Walmart was definitely part of that. I was amazed by the size of Walmart, where you could buy anything you need for such a trip, and could go at any time of the day. Sysco is an acronym for Systems and Service Company. It's an American multinational corporation involved in marketing and distributing food products, smallwares, kitchen equipment, and tabletop items to restaurants, healthcare, and educational facilities. Hospitality businesses like hotels and inns, and wholesale to other companies that provide food service. Genuine Parts Company consists of multiple subsidiaries that distribute automotive replacement parts, industrial replacement parts, office products, and electrical or electronic materials. So let's look a bit closer to these 3 dividend stocks and analyze them using the 7 steps. The first step is to look at the dividend yield, the annual dividend paid divided by the stock price, and this multiplied by 100 to get the percentage. The yield between 3 and 7% is considered to be a good catch. The dividend yield of Walmart is 1.5. Sysco Corporation has 3.3% and Genuine Parts Company has 3.5%. The dividend yield of Sysco Corporation and Genuine Parts is good. Walmart is far below the 3%. The second step is to check the dividend growth of over 10 years or more, a sign of a solid dividend and a feature that is attractive for dividend investors. Of course, I already went for dividend aristocrats, so all apply. Walmart has 47 years of consecutive dividend growth, Sysco Corporation 50 years, is a dividend king, and Genuine Parts Company has even 64 years of consecutive dividend growth. All have a great track record and are well above the 10-year criteria. The third step is to look if the payout ratio is under 70%. The payout ratio is the amount of earnings paid out in dividends. The dividend payout ratio is ideally under 70%. You do not want a company that pays out almost every cent they earn to dividends only. That is too risky. Walmart pays out 40%. Sysco pays out 100% of its earnings out as dividends. And for Genuine Parts Company, this is 61%. Remarkable is the Sysco Corporation with 100%. It is way too high. The other 2 are fine. The fourth step is to look at the 5 years dividend CAGR. The dividend CAGR, or compound annual growth rate, is a fast way to measure the dividend growth. Numbers you would like to see is 7% or more, and if that is not met, then add the previous mentioned dividend yield. If they add up to 9% or more, then it's still okay. Walmart has a growth rate of 2%. Sysco Corporation has a growth rate of 5.9% and Genuine Parts Company 5.8%. All do not meet the first step of 7%, but with the dividend yield added, Sysco Corporation and Genuine Parts Company meet this criteria. The fifth step is to check the trend of the dividend yield, a way to check the ratio of the stock price and dividend payout over the years. We would like to see an uptrend where the dividend payout rises more than the stock price. I'll just check the last 5 years. Walmart shows a steady downtrend, not so good. Sysco Corporation shows a downtrend at first, but due to a drop in the price it ended up to where it was 5 years ago. So not really good, but not so bad either. Genuine Parts Company has its ups and downs, but a slow uptrend is showing, so that looks good. The sixth step is to look for the year-over-year trends of the revenue of a company. Walmart has an increase all the way, very good. Sysco Corporation shows a decline in 2019 and had a 42% revenue decline year-over-year for the quarter ending June 30th in 2020. That's not so good. The Genuine Parts Company had an increase all the way, but did have a revenue decline year-over-year for the quarter ending June 30th, 2020. This of 14%, so not good. The last step, number 7, is looking for increasing year-over-year cash flows. Walmart shows a decline over the years, Sysco and Genuine Parts Company as well, but a bit less, but still not what you really want to see. Now to look at an overview of the steps and the results. Walmart only does not meet the criteria for dividend yield, step 1. The other two are above the 3%. All 3 stocks meet the dividend growth of more than 10 years, step 2, and are even dividend aristocrats, and 2 are dividend kings. Sysco Corporation is the only stock that does not meet the criteria for the dividend payout ratio in step 3. And Genuine Parts Company and Sysco Corporation meet the criteria of step number 4 of the 5-year dividend CAGR, only with the dividend yield added, and Walmart does not. Step number 5, the trend of the dividend yield. Genuine Parts Company meets this criteria, and Walmart does not, and Sysco Corporation is not good but not bad either. For step number 6, the year-over-year trend of the revenue. Walmart has an increase throughout the years, very good. Genuine Parts Company and especially Sysco Corporation see a decline in the last years, so not so good. For step number 7, increasing year-over-year cash flows, all 3 do not meet this criteria. If you rate all these steps with 1 for good, a half for not so good but not so bad, and a 0 for bad, Walmart and Sysco Corporation both score a 3. Genuine Parts Company scores a 4.5, and this will be the one to buy. Remember, I am not a financial advisor. This is for entertainment and a bit of educational purposes only. Any investment has risks. Do your own research. So I found my stock to buy for November, a company which has one of the longest years of consecutive dividend growth, 64 years, and it pays out dividends in months where I do not have a lot of payout in yet. When the market opened on the 2nd of November, I bought for $50 Genuine Parts Company, my 11th stock. If you like this video, please consider liking or sharing this video and subscribe if you haven't already. It helps me to grow this channel. Thanks for watching and see you next video.